Welcome back to Investing Talk Podcast. Today, we're digging into a question lots of you are asking. Is Tesla a good time to buy now? We've got a really incredible stack of your sources for this discussion. Financials, market analysis, future catalysts. We're aiming to give you the clearest possible picture. And hey, before we jump in, if you're enjoying these conversations, please do take a moment, subscribe, like, leave a comment, and definitely, if there's a specific company you want us to look into next, drop its name below. Seriously, your input helps us tailor these just for you. Okay, so Tesla, it's a company that, it always generates a ton of buzz, right? A real lightning rod. And our sources show this fascinating mix. You've got groundbreaking stuff happening, in the lab, but also some pretty significant headwinds pushing back on the core business right now. It's almost two different realities.
That's spot on. Yeah, our mission today is really to cut through the noise, pull out the key insights from these sources. We're talking recent performance, future outlook, market sentiment, everything, so you can understand what's really driving the value, and just as importantly, what challenges are sitting right there directly ahead.
Okay, let's unpack that then. Looking at those sources, what's been going on with Tesla, say, in the last 3 months, especially around that autonomy stuff?
Yeah.
Feels like we hear about FSD constantly.
Right. The pace there is quite something. Just in September 2025, Elon Musk announced a major update to full self-driving, FSD. He mentioned they're training a new model, get this, about 10 times more parameters.
10 times, wow.
Yeah, and a much better video compression, too. Think of parameters as like the learning capacity of the AI. So more parameters, potentially a much smarter system. And this is seen by many as, the cornerstone for those future robo-taxi services. It's a big deal. We also saw back in August, Tesla really expanded its robo-taxi pilot in Austin, more than doubled the coverage area. Shows they're trying to scale it. And then in July, they rolled out FSD version 14. And they publicly claimed it's going to be 2-3x better than a human driver.
Huh?
They're even testing these cars in the Boring Company tunnels. So yeah, these are big, tangible moves on the autonomy front.
That FSD news, it sounds incredibly promising, almost futuristic, like you said. It's all about what's next. But does that optimism actually match what's happening today? What are the sources saying about the immediate stuff? Sales, institutional investors. Seems like a bit of a disconnect.
That is exactly the critical contrast, yeah. Despite all that impressive autonomy progress, September 2025, a critical drop in Tesla's new car sales in Europe. The sources point to drops of 55% in the UK and Germany. That's huge.
55%, ouch.
Yeah, it really spotlights the intensifying competition over there and frankly raises some near-term revenue worries. And adding to that, back in July, institutional ownership, the big funds had fell to 49.61%.
So under half.
Right, suggests some major investors rotated out. Probably due to the recent volatility, maybe the mixed guidance for 2025. You see, the market's reacting to current performance too, not just the long-term dream. This all kind of fed into that wild stock volatility in August. The stock actually surged 14% at one point.
Right, I remember that.
Reflecting maybe some renewed optimism, sure, but it was within this broader context of, underlying unease, a very mixed picture.
Okay, so we definitely see that push-pull, innovation versus immediate market reality. Makes sense. But let's look beyond the recent headlines. What about the company's actual financial foundation? Your sources dug into Q2 2025 performance. How's the top line looking? Revenue, earnings?
Yeah, connecting this to the bigger picture, the Q2 numbers, they tell a story of, tightening growth. For the full year 2024, Tesla reported $104.3 billion in revenue. That was up 9% year over year. Sounds okay, right? But zoom into Q2 2025 specifically. Revenue was $26.8 billion. That's only 3% year-over-year growth, a much more modest number.
It's quite a slowdown.
It is. It reflects that intensifying EV competition, absolutely, and the price pressures they're facing. Profit margins are feeling it too. Q2 gross margin was 17.9%. That's down from 18.4% a year earlier, mostly due to those price cuts, plus rising costs for FSD development and supply chain stuff.
Right.
So net income for Q2, $2.18 billion. Down from $2.52 billion in Q2 2024, which means diluted EPS was $0.63, down from 72 cents. And the company itself indicated modest year-on-year volume growth for the rest of 2025. So they're signaling caution, too.
Slower growth, margin pressure, clear headwinds there.
Yeah.
But what about the overall financial health? How resilient are they? Cash, debt, that sort of thing. Can they weather this?
That's a critical question, yeah. And here, the picture is actually quite strong. Tesla is still highly liquid. They reported, get this, $31.9 billion in cash equivalents, and marketable securities as of June 30th.
Okay, that's a lot of cushion.
It's a substantial war chest, yeah. Strong compared to most automakers. And they have a very low leverage profile, only $2.21 billion in long-term debt. That gives them a debt-to-equity ratio of about 0.03x, which is incredibly low for this industry.
Practically zero.
Almost. Means they're funding growth mostly from earnings, not debt. Huge flexibility. Free cash flow for Q2 was $1.36 billion, supported by auto and energy segments. But we should note, capital expenditures were $2.2 billion in Q2. They are spending heavily.
Where's that money going?
Mostly global gigafactory expansion, places like India, Mexico. They're investing big for the future. So while they're financially robust, very liquid, cash flow has tightened up a bit because of these heavy investments and those margin pressures we talked about.
And competitively, how are they holding up? The EV market's changing fast. Are those moats still strong?
Well, they're still top 2 globally in EV sales. That's impressive. But recent data suggests market share has kind of plateaued, especially in key markets like China and Europe. You've got lower cost competitors, particularly from China, really gaining ground.
So the pressure's building.
Definitely. It suggests Tesla's early pricing power might be eroding as the market gets, well, more commoditized, faster than maybe expected, which makes those bets on FSD and energy even more critical for long-term growth, right?
Right. The car business might not be the huge profit engine it once was.
Potentially.
Yeah.
Now, their tech advantages are still there. FSD, the supercharger network, their battery supply chain, that still differentiates them. But regulatory hurdles, safety concerns, they've slowed down how quickly they can recognize revenue from FSD in some places. And the energy and storage unit. Solid Q2 revenue, $2.5 billion, good growth, but still a pretty small piece of the overall pie.
So strong advantages, but the challenges are definitely mounting.
That sums it up well.
Okay, that gives us a really solid baseline. Past 3 months, current financials. So looking forward now, given this backdrop innovation versus intense pressure, what are investors? What's the market anticipating the next few months? What are the sort of confirmed catalysts?
Yes.
Things we know are coming, and what's maybe still in the rumor mill?
Yeah, the next 3 months have some potentially significant scheduled events. Things to watch. First up, that full self-driving V15 release. It's slated for September 25th. Investors will be watching closely for real advancement there. Could it accelerate robo-taxis? That's the hope.
A big one for the narrative.
Huge. Then, the Q3 2025 earnings call on October 7th. That'll be key for updates on European sales, production, maybe those institutional flows we talked about.
Get some hard numbers.
Exactly. Also, you've got the S&P 500 and ETF rebalancing on October 31st, and institutional position disclosures on December 10th. These are more technical index-related things, but they can drive near-term volatility as big funds adjust.
Right.
And beyond that, sources mention Thanksgiving Black Friday sales in November. Could give a hint about consumer demand.
Okay, so some key dates. What about the less certain stuff?
Yeah.
The exciting possibilities. What are the rumors, the speculative catalysts that could really move the needle if they happen?
This is where it gets really interesting for the long-term story, that future reality piece. There's persistent speculation, you hear it a lot, about a multi-city U.S. robotaxi national rollout aimed at scaling the fleet significantly in 2026.
That would be transformative.
Absolutely. Game-changing, potentially. Then there are rumors about a next-generation AI chip for both cars and energy applications, maybe unveiled at a December investor event.
Showing tech leadership beyond just cars.
Exactly. Industry chatter also suggests maybe a major partnership or a tech licensing deal with another automaker or maybe a tech firm.
Interesting. Leveraging their tech.
Could be. And finally, there are reports, sort of whispers, about regulatory talks and local partnerships hinting at a possible rebound in China's EV market in the coming quarters.
Which would be huge given the recent sales dip there.
Crucial. So yeah, these are all high potential but also high speculation events. Could significantly reshape the narrative if any pan out.
Okay, fascinating possibilities. So given all this complexity, the good, the bad, maybe how's the market actually pricing Tesla right now? What are the charts telling us? Technical analysis time.
All right, looking at the price action, last 3 months or so, Tesla's traded roughly between $282 and $355. It's currently sitting near the upper part of that range. It popped up around Q2 earnings, like we said, but has kind of moderated since. Key support looks to be around $280 to $290. That's where buyers have tended to step in before.
Okay, and resistance.
Resistance seems to be around $350, $365. That's where selling pressure has often emerged. Now, the stock is trading above both its 50-day moving average, around $321, and its 200-day, around $301.
Which usually suggests bullishness, right?
Generally, yeah, a short-term bullish trend. But importantly, it is approaching those key resistance levels we just mentioned, and some indicators suggest it might be a bit stretched. Like the RSI, the Relative Strength Index, it's hovering around 62, 65. That's getting close to overbought territory. Doesn't mean it'll crash, but it suggests maybe a pullback is possible. And the MACD, another momentum indicator, shows maybe a slight positive divergence, a subtle hint of strength, but overall momentum seems to be fading a bit.
So price is up, but maybe the force behind the move is weakening.
That's a good way to put it. Yeah, the conviction might be waning. Lastly, implied volatility for options. It's come down since earnings, but it's still above historical averages.
Meaning the market still expects bigger swings than usual?
Exactly. Suggests there's still a higher than normal degree of uncertainty priced in.
Got it. So some short-term bullish signals, but definitely reasons for caution near these upper levels. So bringing it all together, what are the main risks investors need to keep front of mind, both Tesla-specific and broader market stuff?
Right, absolutely critical. From the sources, key stock-specific risks. Number one is that margin compression, price wars, rising costs that hits the bottom line directly. Then there are the ongoing FSD regulatory and safety investigations. That could impact software revenues, slow the rollout. Huge dependency there.
In China.
Yes. Significant geographic exposure to China carries supply chain risks, geopolitical risks, always a factor there. Broader market risks. Intense EV competition. Legacy guys, new players. Everyone's launching EVs now. That pressures pricing. Commodity and currency volatility, too. Battery costs, exchange rates. Those can swing gross margins around quite a bit.
Yeah, global company problems.
Exactly. And finally, macro risks. Slowing global growth, especially maybe in China and Europe. That could definitely hit demand for big-ticket items like cars.
Okay, a lot to weigh there. So let's try to synthesize this. Bringing all these pieces together, recent news, financials, outlook, risks, what's the overall investment thesis for Tesla right now? It sounds like it's walking multiple paths.
It really does. The overall rating distilled from our sources comes out as a 6 out of 10.
Okay, slightly positive, but not overwhelmingly so.
Precisely. The positives are clear, right?
Yeah.
Still number 1 or 2 in global EV volume. That's huge. Strong balance sheet, tons of cash gives them flexibility. Leading tech stack, FSD, superchargers, and proven management. But the negatives are significant too. Sluggish growth currently, declining margins, mounting global competition, and a big chunk of revenue tied to price-sensitive segments. And importantly, those medium-term drivers, India, Mexico factories, the energy segment growing, FSD really taking off, they aren't really expected to significantly boost profits until 2027 at the earliest, according to these sources.
So a potential gap.
There's a potential gap. The long-term vision is compelling, no doubt, an AI and energy powerhouse, but the immediate reality, slowing vehicle growth, fierce competition. Those are real headwinds now. It really poses that core question for you. Can the future arrive fast enough to overcome these present challenges?
That really frames the dilemma well. So for different types of investors, someone looking short-term versus long-term, what does this suggest?
Yeah, the time frame matters a lot here. For short-term trading, there might be a swing trade opportunity within that, say, $290, $350 range the stock's been in. But the risk-reward, honestly, doesn't look exceptional right now, given where it is, the RSI, the volatility. It's not screaming buy for a quick flip.
Okay. And for long-term investment?
That picture is, well, mixed. The long-term growth potential. It's still intact if those next-gen models deliver. If the FSD and energy vision truly materializes and scales. Big ifs. However, current valuations, combined with that ongoing margin risk and the competitive headwinds, it really suggests caution for putting large, new, long-term money to work at these prices right now.
So maybe wait for a better entry or more clarity?
Patience and really watching those upcoming catalysts might be key for the long-term view.
It's definitely clear Tesla presents this complex picture, doesn't it? Balancing that incredible innovation with some very real present market challenges.
Indeed. You know, Tesla's near-term strategy really hinges on getting FSD deployed successfully and scaling those autonomy services. That's the key. But continued sales pressure, maybe waning institutional enthusiasm, those could really challenge the upside unless new revenue streams pop up or operating results get stronger, soon.
So thinking ahead to early 2026. What's going to define Tesla's path? Will it be FSD finally breaking through and bringing in real money? Or will that relentless sales pressure and competition be the stronger force, kind of slowing things down? That's definitely something for you to consider as you watch how things unfold.
And just a reminder, this discussion, like all our content, it's for research purposes only. It's definitely not investment advice. Please always do your own due diligence.
Absolutely. Well, thank you for joining us on Investing Talk Podcast. We look forward to exploring more fascinating topics with you next time.